In today's lesson, we will be talking about absorption costing and variable costing. There are two general approaches that are used for valuing inventories and cost of goods sold. One approach is called absorption costing. This is generally used for external reporting purposes. The other approach is called variable costing, and this is preferred by some managers for internal decision making and must be used when an income statement is prepared in the contribution format. In this lesson, we have four learning objectives. So you have to make sure na at the end of this discussion, you should be able to first explain how variable costing differs from absorption costing and compute unit product costs under each method. Second, you should be able to prepare now income statements using both variable costing and absorption costing. Your third objective is that you should be able to reconcile variable costing and absorption costing net operating incomes and explain why the two amounts differ. And then lastly, you should be able to describe the advantages and disadvantages of both variable and absorption costing. Now, let us start with our first learning objective, and that is to explain how variable costing differs from absorption costing and compute unit product costs under each method. Absorption costing, this is also called the full cost method. It treats all costs of production as product costs, regardless of whether they are variable or fixed. Since no distinction is made between variable and fixed costs, absorption costing is not well suited for CVP computations. Under absorption costing, the cost of a unit of product consists of the following: direct materials, direct labor, and both variable and fixed overhead. Variable and fixed selling and administrative expenses are treated as period costs and are deducted from revenue as incurred. Variable costing, this is also called direct costing or marginal costing, treats only those costs of production that vary with output as product costs. This approach dovetails with the contribution approach income statement and supports CVP analysis because of its emphasis on separating variable and fixed costs. The cost of a unit of product consists of direct materials, direct labor, and variable overhead. Fixed manufacturing overhead and both variable and fixed selling and administrative expenses are treated as period costs and deducted from revenue as incurred. So ngayon, how do we compute unit cost under variable costing and absorption costing? So we have in this particular slide an example. So let's say we have here JFC, and JFC produces a single product with the following information. So, gaano karami yung units na napoproduce niya annually? We have 30,000 units. And we have the following variable costs per unit. We have your direct materials, direct labor, and variable overhead. The total of the three items is $12. We also have variable selling and administrative expense, and that is $4 per unit. Fixed costs also good for 1 year is also given. Fixed overhead is 90,000, while fixed selling and administrative expense is 70,000. So your unit product cost is determined as follows. Let's start with absorption costing. Your total unit product cost is $15 per unit. Paano na-compute yung $15? First, we have here your DM, DL, and variable manufacturing overhead, or your total variable product cost. And then from there, we just simply add your fixed manufacturing overhead per unit na $3 naman. Paano na-compute yung 3? Remember na yung fixed manufacturing overhead ninyo is 90,000 and yung annual production ninyo is 30,000 units. So we simply divide 90,000 with 30,000 units, and that's how we computed to $3 per unit. So we just simply add yung 12 na variable product cost plus your fixed overhead per unit na 3, that will give us a total of $15 per unit. Now, paano naman i-compute under variable costing? Now, under variable costing, we only consider your variable product cost, yung DM, DL, and variable manufacturing overhead. Anong in-exclude natin? We did not include your fixed manufacturing overhead per unit. Ano yung reason behind? It's simply because, if you can still remember from our earlier discussion, how do we treat fixed manufacturing overhead per unit under variable cost? We treat that automatically as a period cost. Now, meron pa tayong red notes dito sa baba para mas ma-emphasize, no? At saka hindi talaga natin makalimutan. Now, we proceed to our second learning objective, and that is to prepare income statements using both variable costing and absorption costing. Let us assume the following additional information for JFC. Now, for JFC, nakabenta siya for the year ng 27,000 units at a price of $50 per unit. And we also assume that there is no beginning inventory. Now, let us prepare the income statement under absorption costing. Let's start with the format. I'm sure you are familiar with the format kasi ito yung format na tinuro sa atin nung nasa first year tayo, yung nasa second year tayo. Now, looking at absorption costing, we can see, if you look agad sa bottom line, na yung kanyang net operating income for the year is 767,000. Paano na-compute yan? Okay? So, we start with your sales. Gaano karami yung naibenta natin? We were able to sell 27,000 units at a price of $50 per unit. So, we just simply multiply the two items. We will be able to get 1,350,000. And from your sales, we deduct your cost of goods sold. So, paano i-compute yung COGS natin? First, we determine how much is your beginning inventory. Now, since we stated earlier that we assume that there is no beginning inventory, that's why our value here is 0. From your beginning inventory, we add your cost of goods manufactured. As we said earlier, na si JFC, nakaka-produce siya annually ng 30,000 units. Yung 30,000 units, we multiply that with your product cost of 15 per unit. If you can still remember, ang breakdown nitong 15 per unit is your variable product cost of 12 plus your fixed manufacturing overhead per unit na 3. So 30,000 times 15, we have a total of 450,000. So for this year, your total goods available for sale is 450,000. From that figure, we will deduct the value of your ending inventory. So, magkano yung value or yung amount ng ending inventory natin? That is 45,000. Anong breakdown nito? That is 3,000 times $15 per unit. Saan galing yung 3,000? Remember, you were able to produce during the year how many units? 30. At wala kang beginning inventory. So, per piece, gaano karami yung inventory mo? 30,000. And gaano karami yung naibenta mo? 27,000. So, we are left with 3,000 units in ending inventory. So, your COGS for the period is 405. Paano na-compute yan? 450 minus 45,000. And then the next thing that we do is we compute for your gross profit. So, we just simply get the difference between your sales and your COGS. So, your gross profit for the year is 945,000. And from there, we deduct your selling and administrative expenses. So for your selling and administrative expenses, we have two items. The first is your variable selling and admin expenses. So magkano yung variable cost per unit ng selling and admin? That's $4 per unit. We just simply multiply that with your cost driver na the number of units sold. Gaano karami yun? 27,000. So a total of 108,000. The second item is your fixed selling and administrative expenses. Magkano naman yun? 70,000. Bakit buo agad? Because fixed yung kanyang nature. So regardless of the number of units sold, it will still be 70,000. So magkano lahat yung selling and admin expenses natin? We have a total of 178. So gross profit of 945 less your selling and admin expenses of 178, our net operating income under absorption costing is 767,000. Now, let's take a look at your variable costing. With your variable costing, you can see that your net operating income is only 758,000. Paano na-compute itong 758,000? But before we compute, tingnan muna natin yung format. Now, if you notice, the format is not the same with absorption costing because sabi natin kanina, variable costing is more supportive of your CVP analysis, and if you use variable costing, it's only appropriate na ang gamitin natin na format is the contribution margin format ng income statement. So we begin with your sales, 27,000 units, multiply that by $50 per unit, we get 1,350,000. But instead of deducting your cost of goods sold, anong ibabawas natin from your sales, we deduct your variable expenses. So what are your variable expenses? Dalawa yung variable expenses natin. One, we have variable COGS, and the other one, we have your variable selling and admin. Compute muna natin magkano yung total variable COGS. So, anong formula? We have your beginning inventory, 0. Kasi nga, diba, our assumption, we have no beginning inventory. And then from there, we add again your cost of goods manufactured. You were able to manufacture how many units? 30,000. And magkano yung product cost per unit under variable costing? If you can still remember, the total variable product cost is $12 per unit. Hindi kasama yung 3 kasi yung 3 is fixed manufacturing overhead. So 30,000 times 12, we have a total of 360,000. So your goods available for sale is 360. Then we deduct from that amount the value of your ending inventory. So gaano karami yung naiwan? 3,000 times magkano yung product cost per unit? 12. So you have a total of 36,000. So your variable COGS for the period is 324. And then we add to 324 the value or the amount for your variable selling and administrative expenses na 108. Paano na-compute itong 108? 27,000 times magkano yung variable selling and admin per unit? $4 per unit. So, magkano ngayon ang total variable expenses natin? That is 432,000. And your contribution margin for the period is 918,000. Paano na-compute yan? Kunin lang natin yung difference between your sales and your total variable expenses. Ngayon, from your contribution margin, we now deduct your fixed expenses. What are your fixed expenses? Una, meron tayong manufacturing overhead na magkano yun? 90,000. And second, we have your selling and administrative expense na 70 for a total of 160,000. That is why your net operating income for this period under variable costing is 758,000. Now we move to our third learning objective. That is to reconcile variable costing and absorption costing net operating incomes and explain why the two amounts differ. Okay, tingnan natin itong table na to. Bago natin i-discuss yung laman ng table na to, balikan natin yung given. Diba? If titingnan nyo yung original ng given, during the year, gaano karami yung na-produce ni JFC? 30,000 units. So, yung kanyang variable manufacturing cost, yung na-spend ng JFC for variable manufacturing cost is 360,000. Yung ice ninyo, lagay nyo muna dito sa total na column. Okay, so nakita natin 360. Mapa-absorption costing man yan or mapa-variable costing. Paano na-compute yung 360, ma'am? Again, yung 30,000 na na-produce, multiply mo lang doon sa variable manufacturing overhead mo na $12 per unit. And then, we add yung amount that you spent for fixed manufacturing cost. Magkano yung nagastos mo? 90,000. So, in short, whether you use absorption costing or variable costing, you spent a total of 450,000 for JFC to produce the 30,000 units. Now, ngayon, itong 450, distribute natin among COGS, EI, and your period expense. Okay. Sa COGS, simulan natin with absorption costing. How much of the 360 ng variable manufacturing cost ang charge natin sa cost of goods sold? We charge 324. Bakit 324? Because out of the 30,000 units na na-produce natin, yung naibenta natin is only 27,000. So 27,000, you multiply that by $12 per unit, you will be able to get 324,000. And then what happened dun sa difference na 36? Saan natin i-charge yun or saan natin ipe-present yun? Ipapakita natin yon under ending inventory. So, 36,000. Ang breakdown nito is 3,000 units na nasa ending inventory multiplied by $12 per unit. So, yung 324, kung balikan natin, nasaan napunta? Napunta sa COGS. And saan magre-reflect itong COGS? This will be reflected in your income statement. Yung 36,000 naman, saan natin makikita yan? Makikita natin yan sa ating balance sheet. So, in short, yung 360,000 that you spent for variable manufacturing cost, 324 is already recognized as an expense, while the 36,000 remains as an asset. Next, ang treatment naman ng 90,000. Ang 90,000, if you're using absorption costing, ang nirecognize natin under COGS for the period is 81,000. Bakit 81,000 lang? Kasi nga ulit, gaano karami lang yung nabenta natin? 27,000 units. So, 27 out of 30,000 times 90,000, you get 81,000. What happened to the remaining na 9,000? Again, charge natin sa ending inventory. So, 81,000, saan napunta? Nasa COGS. Yung 9,000, nasa ending inventory. So, ang total niyan, 405 ang nasa COGS, while 45,000 ang nasa ending inventory. Ngayon, tingnan natin ang variable costing. With regards to variable costing, walang pinagkaiba on how variable costing treated variable manufacturing cost. It is exactly the same on how absorption costing treated variable manufacturing cost. You have 324 recognized as cost of goods sold, and you have 36,000 na nasa ending inventory. Saan sila magkaiba ngayon? On how variable costing treated your fixed manufacturing cost. No, makikita natin na unlike dun sa absorption costing, wherein 81,000 yung charge ninyo sa COGS, dito sa variable costing, yung buong 90,000 is recognized as a period expense. Ibig sabihin, walang ni piso na mapupunta sa inyong balance sheet as an asset. Unlike sa absorption costing wherein yung 3,000 na hindi na ibenta, nag-charge tayo ng $3 per unit. So, makita natin na yung difference pala nilang dalawa is with regards to the treatment dun sa fixed manufacturing overhead per unit. If ever merong naiwan sa inyong ending inventory. Ngayon, reconcile na natin yung difference between the net operating income under absorption costing and yung net operating income under variable costing. So let's begin with the variable costing net operating income. Magkano yun? 758,000. Then we just simply add yung fixed manufacturing overhead deferred in ending inventory worth 9,000. So, ngayon, your variable costing is now adjusted to the net operating income ng inyong absorption costing, which is 767,000. Ngayon, let us try to complicate yung sample problem. So, let us assume na yung original given kanina is year 1, tapos we have here data for year 2. So, meron tayo ditong additional information. So, meron na tayong beginning inventory na gaano karami, 3,000 units. And then, during the second year, JFC was able to sell 31,000 units. Yan lang yung additional information natin. The rest ng kanyang variable costs as well as your fixed costs, the same pa rin with the original data. Compute ulit natin magkano yung unit product cost under absorption costing and variable costing. So, under absorption costing, your unit product cost is 15, 12 coming from variable manufacturing cost, tapos 3 from your fixed manufacturing overhead per unit. Before ko pala makalimutan, the same pa rin yung number of units manufactured during the year, 30,000 pa rin. Now, with regards naman to your variable cost, yung unit product cost natin is 12. Hindi natin sinama yung fixed manufacturing overhead per unit. Now, let us take a look at the income statement for year 2 under absorption costing. Now, sa year 2, magkano net operating income under absorption costing? It's 891,000. So again, we begin with, paano na-compute yan? So we begin with your sales. Magkano sales natin? 1,550,000. Pero instead of using 30,000, dahil sa second year, 31,000 na yung naibenta. So we just change yung 30, gawin natin 31. And also, same pa rin yung selling price na inassume ko, which is $50 per unit. Then, we deduct from your sales your cost of goods sold. So, paano na-compute yung cost of goods sold natin? We begin with beginning inventory, pero this time, meron na siyang laman, unlike year 1 na 0. Paano na-compute yung 45,000? We assume, or if you notice, nung year 1, gaano karami yung naiwan sa ending inventory? We have 3,000 units. We multiply that by 15. So, the amount of your beginning inventory is 45,000. Then, we add your cost of goods manufactured during the year. You were able to produce 30,000 units. So, therefore, your goods available for sale is 495. And then, ibabawas natin yung ending inventory na 30,000. Ma'am, paano na-compute yung 30,000? So, tingnan natin ha. Meron tayong beginning inventory na 3,000 units. nakapag-produce ka ng 30,000 units during the year. So, yung total available units mo during the year is 33,000. Out of the 33,000, yung naibenta mo lang is only 31,000. Thus, at the end of the year, you are left with 2,000 units. So, yung 2,000 units na yon, we will multiply that by $15 per unit. Kaya na-compute natin yung 30,000. So, for the second year, your cost of goods sold is 465,000. Now, getting the difference between your sales and your COGS, we can arrive with 1,085,000 as your gross margin or your gross profit. And then from there, we deduct your selling and administrative expenses. Magkano ang selling and administrative expense natin? So, we have variable selling and admin na 124,000. Paano na-compute itong 124,000? 4 dollars per unit. Multiply natin ng 31,000. And then, the fixed portion of your selling and admin na magkano yon? 70,000. For a total na 194 for selling and admin expense. So we have here gross margin of 1,085,000. Then we deduct the total selling and admin expense. We arrive with your net operating income of 891,000. For variable costing naman, your net operating income is 894. So, paano na-arrive itong 894? So, your sales, 1,550,000. Then, we deduct your total variable expenses. So, compute muna natin yung first variable expense, which is your variable COGS. Your beginning inventory is 36,000. That's 3,000 times 12. Then your cost of goods manufactured, 360. So your total goods available for sale is 396,000. Then we deduct your ending inventory. So gaano karami yung naiwan? 2,000 units. Then we multiply that with your product cost of 12. So we have 24,000. So your total variable COGS is 372, and then we add to that your variable selling and admin na 124. Thus, your total variable expenses is 496,000. Getting the difference between your sales and your total variable expenses, we come up with your contribution margin of 1,054,000. From your contribution margin, we deduct your fixed expenses na manufacturing overhead na 90 and your selling and admin expense na 70. So, your total fixed expenses is 160,000. So, ngayon, under variable costing, your net operating income is 894. Ngayon, let's reconcile yung income under variable costing and the income that you solved under absorption costing. So, mas malaki yung income reported under variable costing kasi that's 894, while yung income reported under absorption costing is only 891. Nasaan yung difference? The difference again is with your fixed manufacturing overhead. So, if we take a look at this table, so we begin with your variable costing net operating income na 894. Then we add yung fixed manufacturing overhead deferred in ending inventory. Magkano yon? 6,000. Kasi di ba may naiwan na 2,000 units at the end of the period. Tapos yung FMOH per unit nun is 3. And then, we get the total. Magkano total nun? 900,000. But you have to remember, unlike nung year 1, walang beginning inventory, sa year 2, meron na tayong beginning inventory. So, what do we do here? From the total, we deduct yung FMOH released from your beginning inventory. Bakit siya na-release? Kasi naibenta na siya this period. This goes to say na we follow your first in, first out in the accounting of your inventory. Kasi 'di ba, if you recall nung second year kayo, bawal na tayong mag LIFO or last in, first out. So, pag silent yung problem, we always assume that the company is using the first in, first out method. So, in this case, magkano yung binenta mo gaano karami yung binenta mo from the beginning inventory? Binenta mo lahat ng 3,000 units. So, na-release yung tinago mo last year na 9,000 worth of FMOH. Tapos ngayon, may tinago ka na naman na 6,000. That's why if you notice, the difference lang talaga between your variable costing and your absorption costing, the net operating income is only 3,000. Problem, this time, gamitin natin 3-year period. So, meron tayong additional information. Beginning inventory natin is 2,000 because if you remember, yung ending ng second period is 2,000 units. Tapos this year, gaano karaming nabenta ng JFC Corporation? 32,000 units. And then, with regards dun sa ibang data, the same pa rin sa year 1 and year 2, wherein sa JFC nakapag-produce ng 30,000 units. Variable costs per unit natin is still the same as well as our fixed costs per year. So, the same process pa rin. We compute yung product unit cost ninyo under absorption costing and variable costing. Since the given is the same, so we have here $15 per unit under AC and $12 per unit under variable costing. Ngayon, let us compute yung inyong net operating income under absorption costing. So makikita natin na yung net operating income under absorption costing is 922,000. Paano na-compute yan? Again, we start with your sales, wherein meron tayong 1,600,000. So, yung number of units mag-iiba. This time around, magiging 32,000 units na siya. Is it possible na 32,000? Yes, because you have beginning inventory of 2,000. Tapos, di ba, nakapag-produce ka during the year ng 30,000. So, all in all, meron kang 32,000 units. Wala tayong ending inventory kasi nga, fully sold lahat yung naiwan at na-produce natin during the year. So, for year 3, your cost of goods sold is 480,000. And your gross margin is 1,120,000. Then we deduct your selling and admin expense. Variable selling is 128. Paano na-compute yan? That's 32,000 times, di ba? $4 per unit yon. And then 70,000 for your fixed selling and admin. That's how we arrive with net operating income of 922,000. Now, let's take a look at variable costing. Yung net operating income niya is 928,000. Paano na-compute yan? We have sales of 1,600,000. Then, we deduct our variable COGS na 384,000. Ang breakdown ng 384 is 24,000 coming from your beginning inventory. Then, we add your cost of goods manufactured na 360. So, goods available for sale is 384. Again, same with absorption costing. Wala na tayong ending inventory kasi nga naibenta lahat ng inventories natin. So, your variable COGS is therefore 384,000. Then, we add to that your variable selling and admin na 128. So, you have total variable expenses of 512,000. And then, we deduct 512 from 1,600,000. So, we have contribution margin of 1,088,000. And then, from there, we deduct all your fixed expenses consisting of manufacturing overhead and selling and administrative expenses, a total of 160,000. So, we have here a net operating income of 928,000. Let's reconcile ngayon your variable costing and your absorption costing net operating income. Under variable costing, you have computed earlier na yung NOI mo is 928, while under absorption costing, yung NOI mo is 922,000. Wala tayong ending inventory, so wala tayong i-add na FMOH, pero may i-deduct tayo na FMOH coming from your beginning inventory. How much yon? 6,000. Paano na-compute itong 6,000? Remember, the number of units in your beginning inventory is 2,000, while your FMOH per unit is 3. So 928 less 6,000, you have absorption costing net operating income of 922,000. We have here a summary no result from year 1 hanggang year 3. For absorption costing and variable costing. So, meron tayong year 1, 767 na net operating income under absorption costing and 758,000 for variable costing. Hanggang year 3 yung comparison natin. And then, meron tayong last column, which is your total. Now, if you see, the total is exactly the same under absorption costing and variable costing. Paano na-compute yung total? We just simply added yung net operating incomes ninyo ng year 1, 2, and 3. Now, I have a question for you. This will be your assignment. You tell me the answer during our synchronous discussion or meeting. Hindi ko pa alam kung kailan kasi nga diba pre-recorded itong audio natin. So, I will just give the announcement sa inyong Google Classroom kung kailan man yon. So, assignment niyo. So, I'm telling you in advance. You tell me during our synchronous meeting kung bakit under the total column, the result is exactly the same, both for absorption costing and variable costing. And then you also tell me, second assignment niyo, bakit may mga year wherein mas malaki yung income under absorption costing, bakit may mga years na mas malaki yung income under variable costing. And then for your third assignment, ang ating learning objective number 4. So you find out and you try to understand. You tell me what are the advantages and disadvantages of using either variable or ng absorption costing. That ends our lesson. That ends our discussion for variable costing versus absorption costing. So I will see you during our synchronous meeting. God bless and keep safe.